What's going on, you guys? My name is Zach Hartley and welcome back to the weekly watch list. My goal with this series is to share with you the stocks that are at the top of my watch list going into the week ahead, as well as how I feel about the market conditions. So let's dive right in. Now, this week we are going to be using charts from stockcharts.com. As I'm trying to basically create this video and film it, Questrade is actually updating their system. So I can't get into my normal account. So this is what our charts are going to look like for this week. First, we're going to start with the NASDAQ here, and as you can see, we are in a very clear bearish trend, falling from around 15,500 down to below 13,000 right now. It looks like we could be approaching some key levels of support around 12,500. But as of right now, we don't have a whole lot of positive signs. Now, when we look at the S&P 500, it's a fairly similar kind of chart that we are seeing. We aren't approaching any major key levels of support, at least this last week that kind of followed. But what is interesting to see is we are starting to set some higher lows in the S&P 500. So it looks like we could be forming a bit of a wedge pattern right here. We'll have to see how this kind of unfolds and if this holds up. It's still a little bit early to kind of try and say that we've figured out what's going to happen here. So, and then when we turn to the Dow Jones, we can see that we are also in a very clear bearish pattern. We have broke through our major levels of support right here. Our 50 and 200-day moving averages have actually just crossed over, and it's not looking real great for the Dow Jones. We may have some support right around 32,000, but only time will tell. Again, we don't have a whole lot of positive signs. Now, in summary, with regards to the market conditions, as you can see, we're in a bearish market with regards to our indices, but we also have some new information that just came out. In February, our inflation number was 7.9%, which basically means that compared to February of last year, prices have gone up by 7.9% on average, and that is the highest increase that we have seen in the last 40 years. So that is a big number, that is a big deal. And this number continues to climb month over month, which is not good to see. And rising fuel costs and rising energy costs contribute to the cost of absolutely everything. And so if the cost of fuel goes higher, it's more than likely that inflation is going to continue to increase. Now, we also have the Russia and Ukraine conflict, and that is putting more pressure on energy markets. It's one of the main reasons that the energy prices are rising. We also have the Federal Reserve meetings coming up. I believe it is this week, and we are expecting the rates to rise. So that could be good for some companies. That could be very bad for some companies. And usually that is kind of designed to slow down inflation. And so what you need to think about is, based on these market conditions that I just described to you, what kind of securities will do well in this environment. It doesn't have to be just stocks. It could be ETFs, it could be bonds, it could be crypto, it could be whatever you think is going to do well in this type of economic environment. And so, in my opinion, here's what goes through my head. Gold stocks usually do well in times of uncertainty. You can measure uncertainty by conflicts around the world, by prices, by inflation, by how people feel. You can also measure it by the VIX, and by most of those standards, the uncertainty level is usually increasing, and during those times, gold is usually considered a safe haven. Now, during times of major conflict, like we are seeing with Russia and the Ukraine, it is the defense stocks that usually do well. I've talked about that lots in my last couple of weekly watch list videos. Now, when oil prices and energy prices are high, it is usually the producers of that energy that do extremely well. And when interest rates start to go up, that means that banks usually have an opportunity to make more money. And so banks usually do well. And so even though there's a lot of negative pressure on the market as a whole, that can usually create buying opportunities within specific niches and specific industries. And so that's what you want to watch out for. But you first need to be able to analyze the large market conditions and understand what's going on. Now, when we look at cryptocurrency, it's really, really interesting. You can see Bitcoin, we are starting to establish some higher lows right here. We have some very clear resistance at 45,000. It acted as support right here in December. It is now acting as resistance in February and March so far. It looks like we could have some basically just kind of ascending levels of support right here. But if this breaks down, it could be back down to 35,000, which would definitely not be a good sign. And when we look at the Ethereum chart, it's also very interesting. It's kind of like comparing the NASDAQ to the S&P 500. We are definitely in a bearish pattern, but we're starting to create some higher lows right here, almost starting to form a wedge pattern, kind of like what I showed you earlier. Now, that is what the large market looks like with regards to earnings. We don't have any major big companies reporting earnings this week. We've got FedEx, we've got GameStop, and we've got Hut 8 all reporting on Thursday. Dollar General is also pretty big, and we've got a couple of companies kind of throughout the week. I took a look at Super League this week. I took a look at Catapult this week, this company right here. I took a look at a couple of other ones in here, and none of them really stood out to me. So we're going to kind of stick with what I know and the companies that I'm watching. And the first thing I want to tell you about, though, is the Discord chat. So if you're interested in seeing what I am buying and selling in my analysis and the charts that I look at on a daily basis, definitely consider signing up for the Discord chat. That is a community of traders that I am trying to build, where I share my analysis, my trades, my research, and I try to get everybody else to do the same. So if you're interested in that, it's basically a way for you to not be sitting at home alone. It's only $5 per month, and I would love for you to join. Link is down below in the description to this video. But the first stock that I want to talk about here is Barrick Gold. Now, like I said, in times of uncertainty, gold stocks tend to do well. Barrick Gold has done extremely well over the last little while here, and as gold has risen up, we are now at near all-time high prices for gold, and Barrick Gold is also approaching basically a kind of 2-year all-time high right here. As you can see, we have definitely approached some resistance around 25. We actually broke out and pulled back down to 24. But what I'm thinking here is that if this conflict continues, if we see any type of escalation where Russia extends beyond Ukraine, gold is going to be a very, very desired resource, and being able to get into a company like Barrick Gold could be a great opportunity. Now, in the event that we start to see dramatically higher interest rates from federal governments in Canada and the United States, I think the bank stocks are going to do extremely well. If you take a look at TD Bank here, I'm really interested in the chart right now because, as you can see, we approached some significant levels of resistance at $75 here in November and December. We just could not get above $75, and then we finally broke through right before Christmas here. We ran up to a high of $86 before crumbling all the way back down to the exact same level of $75 right here. We have now had 3 nice green days where we have traded higher and higher and higher. We're starting to see some good signals from our indicators right here. We don't want to rely on that, but what we are seeing is some nice confirmation with regards to the analysis that is on the chart right now with regards to support at 75. So that is just kind of an additional sign of confirmation. And if we see this continue, and if we continue to see interest rates rising, I think these bank stocks could do very well. TD would be one of my picks. They have a pretty safe dividend right now, and the technical analysis is starting to line up. Now, going down into the tech companies, what I want to talk about here is when everything is selling off and when the major industries that you really like are selling off, what should you do? Well, you definitely need to hold a lot of cash, and then you should be trying to buy the companies that are the best in their industry, that are going to do extremely well over the long term, and that already have solid financials, solid traction, a good balance sheet, and preferably some profit. And for me, in my mind, that is Amazon. Amazon has seen a bit of a sell-off recently. We have major support at 2,700 right here. As you can see, we have bounced off 2,700 twice right here, and we just moved higher on the announcement of a 20-to-1 stock split. I think that's going to open it up to a whole lot of retail investors. I think it's going to be a great opportunity for Amazon, and this is actually one of my favorite companies over the next 5 to 10 years. I just don't think anybody's going to be able to compete with Amazon, and unfortunately that actually kind of goes too far, where they might have some issues with monopoly practice, anti-monopoly practices, and so hopefully that doesn't bite them in the butt. But I really like Amazon long term. I also really like Adobe. Adobe has come down to a very, very key level of support right here around $415 to $420. We bounced off here in March of 2021 after we traded in a channel, and now we have come back down to the exact same level. Adobe is one of the best long-term companies that you can buy. Super stable business model, almost all on subscription revenue. Absolutely beautiful software, and almost everybody uses it. So I really like Adobe. I pay Adobe a lot of money, and I think what they do is absolutely fantastic. Next company here is Advanced Micro Devices. You're not really going to be able to operate a computer without these guys, so they are super, super important. They're coming down to a major level of support right here at 100. They have double tested it already this year. They tested it in October of last year, and they are down by about like 35-40% right now. So I honestly think it's actually a pretty good price for AMD. And lastly is LICY. I do have a position in options in this company. We're seeing a nice little rebound lately, and we have broken out of the bearish trend right here, and we are now starting to break above previous resistance. You can see we established support around $8 right here in August and September. We fell through it and then it acted as resistance. We're starting to break back above it. Hopefully it acts as support as the stock moves higher and brings my options back into the money. Now, that's it for this week's watch list. In summary, the ideas that I want to leave with you are that when everything is on sale, buy the great companies. Don't buy the risky penny stocks. Don't buy the companies that you're not totally sure about but could have big payoffs. Buy the really, really good companies that are going to rebound the first, that are going to rebound by the most, and that are going to give you strong, stable returns on your investments. Next one here is try to understand what the large market conditions look like before starting to choose individual stocks, because it can really help you decide what industry to put your money into. And lastly, if you're interested in learning more about any of these topics, definitely check out my complete stock market fundamentals course. It's hosted on Skillshare. There's over 70 videos on different topics that walk you through everything you need to know, and it's completely free. So if you just want to learn about a couple of different things, sign up with the link down below. It's going to give you a 2-week free trial to get into the platform and give you full access to absolutely everything, including all the other courses on the platform. But you can go through my course, see which videos apply to you, take the videos that you like, leave the other videos out. You get completely free access, and then cancel the subscription before your trial runs out, and you get everything completely free. My course has over 10 hours of content, 11,000 students, 380 reviews, and over 1.6 million minutes of watch time. So I promise you, it is well worth the time, it's well worth the effort, and it'll be the best free resource that you can find online. Now, if you get any value out of this video, please remember to click that like and subscribe button, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.